What's up, everybody? Welcome back to Assisted Living Investing. I want to talk about Fed rate cuts because there's another meeting coming up for the Federal Reserve to potentially cut interest rates again and maybe a couple more times this year in 2025. So they've cut rates several times in the last 6-9 months, and I want to talk about what does it look like for your deals. Should you stay on the sidelines or should you jump in if the rates are going to continue to drop, right? Do we just wait and wait from the drop, or is it better to get started now? So I want to break down some of the numbers on this and really give you a game plan for the best strategy as interest rates are anticipated to continue to drop into 2026. So my project, it's about $7 million in a loan amount through SBA with a first and then a pari passu second on that to get us to 7 million. And so we have seen in the last several months, right, as the Fed drops rates, that my principal and interest payment goes down, right? It's actually gone down by about $3,500 a month. And I anticipate it will continue to go down by hopefully another $3,500 in the next 6 months or so. So that's really dropping my payment by $7,000 and therefore putting more cash, more profit in my pocket by about $7,000 a month, right? Which is not a small amount. So here's how this kind of stuff works. Most times, if you're going to do an assisted living, you'll go to the SBA and they will do a loan program for you that is based on the Wall Street Journal Prime. It'll have some number plus it'll have the prime number plus whatever the spread is there for the bank. And a lot of times those are variable rates. They are not fixed, they're floating. And most people think, oh, floating rate is a bad thing. I actually think right now in the marketplace, floating rate is a good thing. I actually don't want to have a fixed rate, right? You could look at 504 as another loan option as opposed to the 7A. And the 504 a lot of times is a fixed rate. But do you really want to be fixed in the sevens or something like that? The 504 has a 10-year prepayment penalty, right? So SBA, the 7A program, it has a 3-year prepayment penalty, which is awesome. And I'll explain kind of the plan that we are using for this. And it floats up and down, and it has been floating down and is anticipated to continue to float down through the end of 2025 and then hopefully more into 2026. So I actually think it's an awesome loan program to do for this place in the market. I think that you should, if you're going to get into assisted living, you should look at the SBA. It does not matter if you're building new construction or buying existing. The math is the same. You should look at SBA because they will lend the real estate side and they will lend the business side. So they'll lend a lot of capital, which means you need to come up with less equity, which means you need to raise less money from investors, which means you get to keep the biggest piece of the pie, right? Don't give away equity to investors if you don't have to. Now, with that, it's a little bit painful on the front side as we are in a place where there are higher interest rates, right? Currently, as me filming this, the Wall Street Journal Prime's at 7.25. And when I did my loan, it was at 8, right? So it's already dropped 3/4 points since then. And that saved me the $3,500 a month. And it should continue to drop. And they're expecting another meeting in the next couple weeks for it to drop 1/4 point and then maybe another 1/4 point or more in December. So all that being said, it is continuing to drop and drop and drop and drop because my loan has a variable rate and it just recalibrates. I want to say it's every quarter, right? So as the Wall Street Journal Prime interest rate continues to lower, then my loan continues to lower. And so this, I think, is a key factor for this because interest rates are high, which actually keeps a lot of people out of the market. It actually is keeping a lot of big corporate, the big money out of the market right now. And just because of the nature of the deal, right, it's hard for the big guys to get in and it's hard for the little mom and pop people to get in. And so people who have their stuff together, we work with a lot of teams that are husband and wife, 2 partners. They look financially great on paper, but they're not like crazy multimillionaires or anything of that level. It's just kind of normal, middle-class people that are able to do a solid deal and use the programs here like the SBA. So you jump into the SBA, it's a little bit tighter now, right? Because cash flow is going to be a smidge tighter because interest rates are higher. But the deals that we're doing with the end of life and the memory care mansions, man, we're seeing bed rates, 8 to 10, some markets $12,000 or more, and you can make massive, massive returns on this. And so even though interest rates might be in the 7s or 8s, it's totally awesome still. The profit's awesome. And then as it continues to move into, lower and lower rates, then you make more and more money. So on to the original question of should you stay on the sidelines and wait? No, you should not, right? Because if you do a deal like this, you're not trapped in this high loan. You don't have a 7.5 interest rate loan for the next 10 years. You might have a 7.5 interest rate that lowers to 7.25, to 7, to 6, to 6.5 by a year from now. And it's going to keep dropping and dropping and dropping. We're anticipating, we hope. Now, with the SBA 7A program, it's only a 36-month prepayment penalty. So what I am doing is I went build my mansion, right? That right there just takes a year, and then you go and you stabilize, and then you're really only getting, after stabilization, 18 months worth of stabilized tax returns, getting your numbers together, and then you've already hit your 36-month prepayment. So now you're done with that. You can now take your 2 years of tax returns. You will have, at least we do, our teams do, a couple $1 million in equity. That's why we're building new construction. So now you go to your local commercial bank and you look like the rock star. You have a $7-8 million valuation on your mansion with the real estate and the business together. You have $2.5, $3 million in debt. You have multiple millions in equity. You have your tax returns showing, hey, we're making this and this. It's $500 or $600 grand a year. Cash flow on these kind of things. And they're like, yeah, dude, I'm happy to do this loan. You'll get 17 banks happy to do the loan, right? And then you can go and get a competitive rate. So I actually did this on our first deal on Mesa. When was this? I did it in like 2021, where I went and cashed out, refinanced my loan and got a local bank to do a commercial loan. And interest rates were really low and competitive right back then. And so I use a strategy, and I have a 4 or 4.25 loan, 30-year, or maybe 25, 30-year loan on our Mesa property, right? And so that's really the strategy. You use SBA. It's a little bit higher right now. It's going to continue to float down. And then after 36 months, you have your equity, you have your experience, and you go refinance with another, say local commercial bank, and they're going to give you very competitive terms, and the interest rates are presumably even lower in the future. And that way you can get a solid, loan that you can keep for another 10 years or so until you go and you exit and sell the deal. So I think that right now is the time. There is not a lot of competition. There's not a lot of people building, memory care mansions and using these the systems here, and especially going and building new construction, because it's a bit harder on the front side, but the reward is so disproportionately, huge on the backside. And it's only a year, 18 months of hard work, and then you have millions of dollars in equity. And I mean, look at your cost per hour, right? What do you make at your current job? You divide that by $3 million worth of equity. It's like, okay, you're not even coming close to doing that. Just put in the hard work. So don't stay on the sidelines. Now is the time. Interest rates will continue to drop, and it will just put you in a better and better position. So I hope this encouraged you. Go and do a massive one and done deal. If you're not sure about all of this bank stuff that I just talked about, I have so much free content out there. The best place to start is on our website, assistedlivingmansion.com. Hit the free resources. There's multiple courses there. Specifically on this subject here, hit the funding course. Download that. You'll have an email login, and then just dive through that and learn all the good stuff here. All right, so I hope this inspires you to take massive action, do a life-changing deal, and I will see you guys on the next one.